What is going on, everybody, and welcome to another technical analysis. What I like to do in this video is provide you guys some entries and exits for stocks that I am looking at for the week. If that sounds like something you're interested in, consider subscribing, as I do also provide a weekly analysis where I go over current events and scheduled events, as well as check me out on X at Hemi137, as I do provide a daily pulse of the market there as well. But with that being said, let's go ahead and jump right in. As you can see, SPX in itself has actually been holding this short-term trend line pretty well. The way events have essentially occurred is we've had some bad events that have occurred with this new administration, only for things to recover quite quickly. This is something we saw a lot typically with during Trump's first term. So do keep that in mind. I've been kind of forewarning that as we came into this year. But again, you have to understand, again, we're very, very overextended. Again, this is from pause of interest rates all the way up. We've only had one really down month. But aside from that, everything's been pretty much green at that point. So things are very parabolic at this point. So we do want to keep that in mind and be very, very careful. So there's also another trend line here that we've kind of pretty much broke and retested and been floating. Again, I think the only reason we're continuing to chop around like this is because we haven't had NVIDIA earnings. Once we have NVIDIA earnings, I think that will dictate the direction of the market. Once essentially all the industry leaders are reported, the market kind of determines its direction from that point. But considering that they have since scheduled NVIDIA earnings about a week out from all the other major earnings, kind of makes the market sit in limbo until we get that last major earnings, because now NVIDIA also holds about 6% of the index like Apple does at this point. So again, that's what you're kind of seeing here is you're seeing a lot of sideways action. It's not really fun kind of market to be in, but again, we need some other events to occur before this market can really pick a direction as of right now. Now, Bitcoin's doing the same thing. It's chopping back and forth with all the positive news we're getting on Bitcoin. It's not enough to break it out. Again, we're kind of ceiling here at the 108 and then this 90 marks. We got a wide spread here for crypto, and it's just been bouncing back and forth. Looks like we're attempting to go back down to the 90K and retest that. Again, rightfully so. Once we get NVIDIA earnings the next week, the market should know what it wants to do from that point. I'm assuming at this point it would probably break down and pull back some. I am anticipating Bitcoin to at least drop back down to the 73K mark. How long we stay there, I don't really know. But I do believe we're coming into a very bullish market in general. But we do have a debt bomb that does need a burst because, again, prices are just way too high. It's too unaffordable right now. So you do have to keep that in mind. So I do believe some event or some catalyst will cause everything to pull back, especially when you're talking about big tech. And Bitcoin is inflation. Inflation is already on the rise that we've seen over the past weeks. So we'll see if that continues to be the theme. If we get back over 4, you're really going to draw a panic in the market when it comes to tech and Bitcoin. So you need to keep that in mind. But that's what we're looking at for this week. Tesla. There is a lot of things going on with humanoids, and I keep emphasizing this, is Tesla is in the forefront and can mass produce humanoids. By the end of next year, I believe they're aiming to make about 600 humanoids, and then they're going to quadruple that number the next year after that. So you do need to keep in mind it's very much a sooner thing than later. And so I've already started taking positions on this. It hit one of my buy marks here at the 356. It did temporarily get pretty close to this other buy here at the 315 mark. Again, that can happen sometimes where you might miss the zone. You have to understand these zones aren't 100%, but they're very accurate for the most part on most things. Nonetheless, I just bounced out of that. We'll have to see if we can break above this 360 mark this week. If we can, we're going to start trying to attempt to break these others 20 and 50. Typically, when you break the 2050 EMA on the daily, you'll take a sharp dive supported by the 200, which if it bounces like this, it doesn't mean that's a very bullish sign, in my opinion. unless this thing comes cratering down and it wants to hug this 200, then you could see something dive a little bit lower than that. Maybe we see the 275 at that point, but this may have been our lowest point, even with things that are currently going on. If something happens to the market, again, the way things are playing out with the reduction in spending, it could pull out inflation from underneath us and cause us to be in a better state all of a sudden, essentially showing this soft landing. But again, you still need other aspects of the market to correct, like the yield curve, which has been accurate, historically accurate on its depiction of a recession, and it's definitely pointing to one in worsening for the longer. It's the longest period we've been inverted. So there's a pretty scary aspect to that as well. But nonetheless, Tesla, we'll see if we can break back above some of these levels. Kind of roughly waiting around that 378. If we can break above that and hold above that, I think that's very bullish for Tesla. But again, we have to see at this point, we're making higher lows at this point. So we haven't really bounced. We're kind of just taking a dive. Again, this is the way things typically work with these massive pump ups. You just start getting negative news and then it really starts to sell off. So we'll see what happens, but I like the current state of Tesla. RX has had a big week this week. I've been talking about this one. Now it looks like it wants to start breaking out. We'll see. There's a lot of positive news. You're coming into the back half where they're supposed to have a huge announcement for larger pharmaceutical companies starting to produce some of these actually antibiotics and stuff that it's been producing. So this could really start to take off after this week. But we'll see if this consolidation period was all of it. But nonetheless, it's starting to rip back up. So I have to watch and see. And this, I still really like RX. I think it could have a massive year. Those are my two front runners for this year, is Tesla and RX. And it's starting to look like it could potentially be that way towards back half of the year. I think you'll see a massive run from where we currently are as of right now, just depending on the state of the economy. But I do believe these two will hold a solid floor for them to continue to ride up. So again, we are currently at the resistance level. We'll see if we dive back and retest the 835. That may be the last check you can get before this thing really rips. But again, we don't know for sure. But this thing does fluctuate and have a lot of volatility, so just to keep that in mind. Alpha is a big one we've been talking about. It's at a big support here. It's gap down, obviously, from what's going on. I do believe they'll get back to a very good state. So I do believe this could be a very good dip buy. If you're looking long-term swing, like long-term, like a year or two, I think this thing can really do some damage and really recover. As of right now, it's been doing very well. It's just a forward guidance, and they are currently spending to expand at this moment where everybody else is filing for bankruptcy. They are expanding, so you really do need to keep that in mind. But currently holding this level, the 60 could be another mark if it wants to decide to keep selling off. We're just going to have to see. The tariffs have been something that I've been highly concerned about. Once we get the worries and concerns away from tariffs and not having that big of an impact on the market, this thing could really reverse and start ripping. So definitely is one to keep on your radar. And it does need to come back up to the 88 and retest that and see if it gets rejected, which it will initially. But the thing is if it can still sustain that $70 mark and again roughly that 88 mark, break back above that, then I think we're back in business. So I do want to watch at Apple. I want to see what happens with these pullbacks. We've had a pretty nice pullback essentially from kind of earnings, but we are starting to build back up. We'll see if this thing starts selling off again. Again, when we get in this March period, there's typically an event or something associated that occurs that will typically sell the market off pretty heavy. It could be inflation at this point, like I've stated. Next inflation report might be the ticket it needs to really start selling off, but we'll see. Our current head right now is 245, and then our base is roughly sitting around here at the 227. I got a little mini stop here roughly at the 235. So watching Apple moving forward as well. AMD is a big one. I've been talking about this one for a while. It is consolidating solidly here at the 109 mark. Could break that. I wouldn't be surprised if it broke that and visited the 100. It very well could if the market wants to start selling off heavy. but right now it's currently holding this 110 floor. We do have a bit of a speed bump roughly here at the 119, and then another ceiling here roughly around the 129. Again, there's a lot of pretty solid zones here. It can get very choppy, but again, I think they have are expanding in the right direction, and I think you might see a good cycle come out of AMD over the next year, 2 years. So I think it's definitely worth something we need to be paying attention to moving forward. So I do like AMD there as well. Like Amazon, like SoFi, but again, they're too overextended at this point. So I don't want to be bringing those up if they're too overextended. It's not saying I don't like them, but this too overextended at this point. Roblox is another one that's very too overextended right now. I really do like Roblox. Meta, obviously. Hims has been on a massive run. I do like those, but again, too overextended to look at those as of right now. Let's take a look. Baba's been kind of on a tear as well. BA. Now, BA is starting to break out. Like I stated, it broke out here, and then this last retest could have possibly been your last entry before this thing really starts to get parabolic back up to the 220. It's starting to reclaim that. We'll see if this does dip down right now, but currently it is holding this 179 mark, looking for the ceiling to hit about 197. Can potentially enter here, but you really want your stop right below the zone. If it wants to start selling back down to this zone, but you could potentially even make a 179 to 200 run here on BA as well. Now, again, that stock is just too wishy-washy in my opinion. I don't trade it just for full disclosure because of the fact that, again, the plans are falling out of the sky. All I need is one bad news and this thing can turn around, but we're just kind of waiting to see what happens there. So there is Walmart and Target. There's Walmart's reporting this week, so that would be interesting to watch. I don't really want to bring up the chart. It's very overextended at this point, but and then you have JP Morgan. The only thing through this earnings that we've seen is that banks are doing extremely well because everybody's concerned about the top 10 banks. Regional banks and stuff are still reporting all through the remainder of the earnings. It'll be interesting to watch. That pool of money, the Bank Term Funding Program, is pretty much out of money at this point. So at any moment, could get headline news, and this could bring a lot of weakness into the banking or financial sector. So you do need to pay attention to that. But right now we're kind of price discovery for JP Morgan at that roughly that 280 mark. So we'll watch and see how that does. Again, it only moves about 4 to 5 ticks during an average week. So just keep that in mind. And then you got Lemonade. I do really like this one too, but right now it is kind of holding this 33.4. My only problem with this is if it does break this, we could gap all the way down to 22. I think it'd be a safer cause to wait for it to come down to 22, especially if the market wants to pull back, and then potentially buy a 20 anywhere between that 22 and 15, and then this thing could potentially run back up. So do you want to keep Lemonade also on the lookout there? And then Win is another potential one here as well on the larger time period. If you're willing to hold this for a lot longer, this could be building up to a massive move here. And I do believe it can recover up to the 250, but it is consolidating long. It looks like a very drawn out play. It looks like we could go potentially even another year just trading sideways on Win, but it does still pay dividends. Not it's cut its dividends recently, but it kind of helps with just because of the pandemic and everything that went on with the pandemic. So you'd have to keep that in mind. It hasn't really recovered since then, but again, it's getting there, and I think it'll be one over the next 1 to 2 years that will do extremely well as well. So do keep that one on the radar. And then I think that's pretty much it. Spot is way too high. A lot of these are just way too high and way too overextended. Again, not going to bring those up until they come into a position where it's decent enough margin to enter those positions. So do keep that in mind. I'm not fighting any of these other stocks. I do really like a lot of the Mag 7, but again, they are too overextended. I'll wait for a pullback, and yes, it will pull back eventually. We don't know when that will occur, but when it does, we'll be ready. We're just right now potentially playing good plays for the current moment. So, but with all that being said, if you have made it this far, go ahead and drop a like, drop the ticker down below what you're looking at throughout the week, and I will see you guys on the next one.